Hello, this is Trading Wisely and I'm back again with another video. Now in today's video I want to make a quick, short, simple tutorial on how I view support and resistance in the market. Now for me, in order to plot a support and resistance level, all I need are two candles of opposite direction. So I need one to be either bullish and the following candle to be bearish, or the first candle to be bearish and the following candle to be bullish. That's all I need to plot my support and resistance levels. For example, here in this section of price, as you can see, there was an impulsive move to the upside until we arrived at a bullish candle followed by a bearish candle. So in order for me to highlight exactly where that support or resistance level is, all I need to do is highlight the tip of the bullish candle for resistance. That's it. Once I identify where the bullish and bearish candle is, I just get the high of the bullish candle, not the bearish candle, the high of the bullish candle. Why? Because the bearish candle is where the move decides to move in the opposite direction. Likewise, in the opposite manner, if I'm looking for support, all I need is a bearish candle followed by a bullish candle. So in this case, as you can see, we hit resistance over here and then we came all the way down here, and here we found support. So support would be at the low of the bearish candle. So it would be high of the bullish candle for resistance, low of the bearish candle for support, and that's all we need for our support and resistance. As you can see, price here formed resistance, then came down, formed support, and then came up, tapped that resistance level, pulled back a little, and then broke out, and then came back, tapped the resistance, tapped the resistance, now formerly resistance, now support, tapped it again, and then now it's on its way up. That's all I need for my support and resistance. Very simple, very easy, and you do this on all time frames. It doesn't matter if it's the 1 minute time frame all the way to the monthly time frame. You can use this nice, clean, simple, fast and effective way of plotting support and resistance. And as you can see, it is very effective. As you can see, support here, candles were supported, and then price moved. Resistance acted as resistance, price broke through, came back, and formed support. So this is a very cheap, effective, quick way to plot support and resistance. Now as you can see, there was a consolidation here. We can also find our support and resistance using the same concept as we did here in order to find our support and resistance, and that will enable us to determine whether or not we should take a trade. So in likewise manner, price was moving bearishly. Here it did form a level of support, so we could put it on the bearish candle there. It went and then it broke through, and then what does it do? It broke through and then formed another level of support. So right here is the level of support because we have a bearish and a bullish candle. That's all we need for our level of support or resistance. It came up here, bullish candle and then bearish candle. That is another level of resistance. But then what happened after? It broke through. Now in order for a level to be broken, you need two candles in the same direction. So for a level of resistance to be broken, you need two bullish candles back to back. So as you can see, we had a bullish candle over here. This was a doji, so usually I like to ignore dojis when it comes to candle analysis, because in doji, really the sum, if you look at the sum of the movement, is basically zero, because it went up a little bit and it went down a little bit, but then it basically closed the same area that it opened. So the net movement really was zero. It was all basically manipulation. So I like to, whenever I see a doji, I ignore the doji and I just count the net. So we had one candle close above the level of resistance, so that doesn't confirm that it's broken. But once we get another candle, bullish candle as well, closing above, so that confirms that this level has been broken. So once this level has been broken, we can take that off because it has been broken. And then we can see here we had a bullish candle and then a bearish candle. What happened? Price actually came back to this level of previous support, turned resistance and then created another level of resistance. But so that we have the most accurate current level of support, as we can see, this price actually wicked just a little bit higher, so we can adjust our previous level of support turned resistance into our newfound resistance, and that's all we need to do. That we had a candle after that bearish. It's only after this second candle forms and it closes that it confirms that this is actual level of resistance. So that's how we plot our support and resistance, and as you can see, all through this area price actually stayed within the level of this support and resistance, and that's how we were able to determine that this was a area of consolidation. And that's actually what gave me my trade idea once the breakout occurred here. All through here people might be faked out thinking that price is broken out, and in fact it actually didn't break out. Now remember, I told you that in order for a level to be broken, we need 2 candles in the same direction back to back. So what do we have here? We had a price came back up after the forming the level of resistance. Price came back up, tested it, wicked through it, but it didn't close. Then it retreated downwards, then it came back up. We had 1 candle. Then what does the second candle do? It breaks right back below. So as we said, we need 2 candles in order to break resistance. We need 2 bullish candles back to back. What do we have here? It broke that back below, then we had another candle, it closed below. We had 1 bullish candle that closed below. We're looking for our second bullish candle in order to confirm the break, but we get a bearish candle which breaks back within the consolidation zone, so that level has not been broken. We get another bullish candle, looking for our second bullish candle, but no, we do not get the second bullish candle. We get a bearish candle, and then it breaks back within the zone. Same thing happens here. Price closed just on the level. Doji, ignore it. It's the sum of the movement throughout that time period amounts to 0, so we can totally ignore it. We have 1 bullish candle, closes above it, true. Now we're looking for our second candle to confirm. No, we did not get a second candle. Price breaks back within the consolidation zone. So it keeps on doing this, out, in, wicking, out, in. So no breaks occurred throughout this zone, and this is why I love this method of plotting support and resistance, because it saves you from these fake moves. Because if you were plotting your support and resistance like otherwise, like maybe using the bodies of the candle or maybe trying to use the high point, you might miss trade setups that could form, or you might be tricked into taking trades that actually aren't there. But by using this method, it saves you from all this stuff, because not after a break, after 1 candle closes above it, you need to wait for that second candle to also confirm that the first candle is legitimate. Otherwise, you know it's a fake out, and you don't get faked out, and you let other people get faked out. So this is what I was doing right here. I actually took a trade here after I found finally we had a successful break of the level. As you can see here, we have 1 candle, bullish candle above. I waited, second bullish candle. Now this level is confirmed broken. So what do I do? Because this was a nice impulsive move, all I had to do was plot on my fibs. You don't even need to plot your fibs, but this is what I did. I will make another video and explain to you how I draw my fibs and everything. I plotted my fibs. I waited for a retracement back to the 0.618 retracement level. I took a buy setup right here, and I exited right beneath the resistance that was formed. So that's a simple, cheap, effective way of plotting your support and resistance. I hope you liked the video, and if you do like the video, please leave a comment, like it, and subscribe, as I'll be releasing lots more quick tip videos like this in the near future. Thank you. This is Trading Wisely, and I'll see you in the next video.